lot of people ask me what my plan is for when the bubble finally pops and the market crashes. And it's a good question because as it stands today, between our house flips, my rental properties, and the apartments we own, I have over $50 million worth of loans. So that's a lot of liability if the market decides to crash tomorrow. So in this video, I'm gonna go over my next steps on what I would do if that were to happen. If you're new to my channel, my name's Ryan Pineda. I'm a real estate investor and entrepreneur, and the goal of this channel is to help you live the wealthy way. If you go to wealthyway.com, you can get access to our free course, our free Discord community, and our free planner to keep you accountable. So go check it out. Now, let me start out by saying that I don't think the market is going to crash anytime soon. Both the supply of real estate and the interest rates are at all-time lows. These are the biggest indicators of whether or not the real estate market is going to crash. Now, here's the thing. Even if rates were to go up like the Fed is suggesting and supply were to go up, it still would not mean that we're in a crash. It would take a lot of supply and a pretty big interest rate hike to get us back to just a normal market where it's pretty evenly balanced between buyers and sellers. Right now, we're in an extreme seller's market, which is causing prices to skyrocket. But for the purpose of this video, let's just say that the real estate market is crashing or it's on its way to crashing. Well, first off, before it ever crashes, there are some leading indicators that you can look for that will give us a hint that it's coming. Now, it's kind of hard for a lot of us to believe because 2008 seemed like it happened overnight, but traditionally, real estate has always lagged behind the stock market. So when the stock market crashes, it takes a while for real estate to follow suit. And we're kind of experiencing that today. Recently, there have been stock market mini crashes, there have been crypto crashes, yet real estate has remained unchanged. The reason is real estate is illiquid. It takes time to go and sell your properties. It's not like the value goes down tomorrow because all of a sudden all these comps are now saying it's worth less. You just can't get housing sales tomorrow. It's gonna take time. So this is really good for real estate investors because once you start seeing these cracks, you're able to start making your moves accordingly. It's not gonna be like crypto where it could just fall overnight and all of a sudden you don't have anything you can do other than hold what you've got or sell it at the bottom. The first crack I would be looking for is how fast is supply increasing and what's the reason why. If there's no unexplained reason and supply is just constantly increasing, that tells me that we've reached a point where people are not willing to pay these prices and we could potentially be going into a recession. But if you take 2020, for example, where supply increased like crazy because we had all of the lockdowns, people were losing their jobs and getting laid off, to me, that was a different scenario. Most real estate investors looked at the supply only and said, well, it's increasing like crazy, we're headed into a recession. I looked at it and said, we were in a really strong market before these lockdowns. I think that these lockdowns are gonna end at some point here soon, and I think there's gonna be some kind of bailout because you can't just make everyone quit their jobs and lay all these people off without bailing them out. And so in that scenario, I didn't believe a recession was coming because of all of the circumstances that were making supply go up. It was very artificial. And so thankfully for me, I kept buying and we made a lot of money throughout that period when most investors did not want to purchase. But that scenario aside, let's say that there are legitimate signs that scare me. I start to see supply going up, I start to see the interest rates getting hiked up, and I don't think that there's gonna be a bailout, and there's not any reason why it's happening other than there's fear and people just don't want to pay these prices anymore. Well, that's gonna start scaring me and I'm gonna start acting differently. So the thing I would do is first look at all of this real estate that I own. As I mentioned before in this video, I have over $50 million worth of loans out on the current real estate. Now, the most risky thing I have would be the house flips because those are all short-term, high-interest loans, and I'm not planning to hold them for the long haul. I'm very dependent on what their value is today, and so I need to be able to sell them quickly to realize that profit. And as of today, I have over 50 active flips that are over $20 million worth of debt. And what I would do is categorize each flip in its current stage of the process and figure out what is the best exit strategy for all of them. So starting from the easiest decisions, some of those flips would be in sale escrow, meaning that they've already got a buyer on them, they're already fixed up, they're trying to get their loan and buy the property. And in that scenario, I would be doing everything humanly possible to make sure it closes. If the buyer has any kind of second guessing, I would do whatever it takes to make sure they buy the property. I would do any kind of repair request they want. I'd do any kind of repair credits or any kind of discounts if they start to get spooked by the market. I would do whatever it takes to just make sure they buy that property that they're in contract on. Time is your worst enemy in this scenario, so you want to start getting things sold as fast as possible, even if you got to take a haircut on the deal. I'm not trying to be greedy. I just want to sell it as fast as possible. So that's what we would do for the ones that are already in contract to sell. That leaves the next easiest, which is the ones that are fixed up and on the market, but we have not taken an offer yet. With those ones, the very first thing I'm going to do is discount aggressively. In today's market, we are constantly overpricing our properties because we're setting new comps, and there are people just willing to pay that money right now because there's nothing for them to buy. And it's great when you're in a hot market, but when you're coming into a recession, you want to do the exact opposite. So I'll give you an example. Let's just say the market value of a property is $400,000. That's exactly what the comps have been selling for, and that's what your true ARV is. In today's market where it's really hot, we might go try and sell that thing for $430,000 because we know there's probably someone willing to pay it. But if I see the recession coming, I am gonna do whatever it takes to get that thing under contract tomorrow and just give a huge discount. So if it's worth $400,000, I'd probably throw it up for $370,000 just to get it sold. And the goal would be to undercut any other properties that are on the market. Maybe they're priced at $400,000 and they're not even as good as mine. I would still price mine at $370,000, have a better product, and just make sure that I can liquidate it as fast as possible. In this scenario, I'm basically getting rid of all of the potential profit I was supposed to make on the deal, but I'm saving myself a lot of risk because the biggest risk during the recession is time. So if I can eliminate that and just trade out of this property and get rid of the debt, that's a big win for me. So that's how I would treat my properties that are currently on the market. Now, the biggest risk are the ones that are currently under construction because those are going to take time to get fixed up. And what we would do with all the properties that are under construction is look at how close they are all to getting finished. If there are some that are right on the edge, we're going to put all of our resources on getting those ones fixed up. Then we're going to go put it on the market at the same kind of discount I just mentioned. We'll probably take 10% off what market value is and try and just fire sell it. But let's say that we just bought some properties and we know that they're months away from getting fixed up. Well, honestly, with those properties, I'm probably just going to throw them on the MLS as is, not fix them up, and then just try and sell them for what I paid for them. When we flip houses, we're obviously buying them under market value. So if I sell it for what I bought it for, there's probably going to be a buyer for it because it's already a really good deal at that price, at least in the terms of what the prices are today, but we're trying to account for what the prices could be 3 months from now. So that's what I would do with everything that's under construction. Either get it done if it's close to being done, then discount it, or if it's not close to getting done, just throwing it on the market and trying to sell it for what I've got into it. So essentially, with all my existing inventory, I'm just trying to break even on them and get out of the debt. If I lose money, but I'm able to liquidate all the properties, then it's still a win. Now, the other thing to think about is all the properties that we have currently under contract. You might be thinking that I'm just going to back out of those, but that's actually not the case. I would simply renegotiate those deals and try to get a deeper discount. Even during a recession, it does not mean that you stop buying real estate. In fact, the opposite is true. If everyone is not buying and everyone's scared, it just means that there's a bigger opportunity for you to buy. You just have to get a bigger discount than you're used to. And this is exactly what I did in 2020 when everyone got spooked from the pandemic. Usually when we flip houses, we're trying to make 10% of ARV. So if the house is gonna sell for $300,000, we would like to make $30,000 as profit. But when everyone got spooked and nobody was sure what was gonna happen, we adjusted it and said we need to make 20% of ARV. So if this house is gonna sell for $300,000, we wanna make $60,000 on it. Now, in a normal market, getting deals like that is extremely hard. But in a falling market, it's not that difficult because nobody wants to buy and you're not competing with that many people. And so in that scenario, if I'm thinking that the house is worth $300,000 fixed up and I'm projecting a $60,000 profit, depending on what the rehab is, I might be buying that house for $170,000, $180,000. And so it makes it really hard to lose in that scenario. Let's just say that the market stays the same. I was wrong. Well, we made $60,000 profit. This is similar to what happened in 2020. Let's say the market goes down 10% and now the house is worth $270,000. Well, we projected to make $60,000, but it went down by 30, so we still made $30,000 on the flip. Or in a really bad case, maybe it does go down 20% and we just break even on the flip. But even at that scenario, if I'm buying it that cheap, it very likely cash flows, and there's not even a reason for me to flip it. I can just hold it as a rental. So my point is, in a recession, you want to make sure you liquidate what you have based on your old model of buying, and you want to start a new model of buying that has a much bigger spread so that you're protected because you have less competition and more risk. And for me, this is the perfect time to start buying up the blue chip properties as rentals. If we can go into these really nice neighborhoods and get extreme discounts, ones that I know are going to be great long term, I would be heavily focused on building my rental portfolio at this time and getting those things at a steal. Now, some of you might be thinking, what would you do with your rental properties, the Airbnbs, the long-term rentals, the apartments? Well, I've got almost $30 million worth of debt on those ones, but the big difference is I have no need to liquidate them. I bought those properties with the intent of holding them long-term. They all cash flow. It does not matter what they're worth today because I am not trying to flip them and make a profit. I'm holding them for the cash flow and all of the other long-term benefits. Now that just covers my real estate portfolio, but I do want to add one more thing about my businesses. In a recession, most people want to shut down businesses and cut costs. We got a glimpse of this in 2020 when many businesses shut down, but you also saw a ton of businesses thrive during this period because they were willing to adapt and go where the market was going. And that's my exact philosophy. I think when there's a recession, it's going to make things even easier for my business. Instead of trying to lay off people, I'm gonna be looking to attract the top tier talent that got laid off by their company. I would want to double down on all of my marketing efforts because there are so many people who are going to remove their marketing budget, and it's going to make the ad cost for me significantly less. I know this because this is the exact strategy I took in 2020. I doubled down on creating media. I doubled down on my marketing spend. I bought TV commercials even though everyone else was trying to get out of their contracts because I believed that they were discounted, they were a great value, and that many people were going to be watching TV under quarantine. And so when I really think about it, my businesses should have an even bigger opportunity to thrive because of less competition and the ability to do more things. The biggest liability that I'll have is all of the current flips that I own that I bought under a different business model. And so my main goal is just liquidating those and starting fresh with a new business model for the recession. And if you're scared about a recession, don't be. I don't think it's happening anytime soon. But if you want to be up to date on what the best strategies are in real estate investing, I'd highly recommend getting in my coaching program. You can go to futureflipper.com and apply to be coached directly by me. And I let all my students know as my plans shift on a weekly basis because the world is changing fast and you got to be ahead of the curve. But anyways, hope you enjoyed this video. Make sure you're subscribed and I'll catch you on the next one. Peace.